Welcome. Thanks for joining us here on Market Call. I'm Morella Fernandez. Keith Richards on the show today, President Chief Portfolio Manager at ValueTrend Wealth Management. And today he's taking your questions on technical analysis. Here's how to reach us. 1-855-326-6266 if you would like to call in. You can also send your questions through an email, marketcall@bnnbloomberg.ca. Keith, thanks for coming in today.
Good to be here, Merle.
So the G7 finance ministers have been meeting in Alberta. I'm wondering if you think meetings like these sort of quell investors' nerves about trade situations.
You know what? We do use fundamentals. Craig, my associate, is a CFA, but I pay attention to basically nothing but the charts. So let's moot that question.
Okay, so you don't pay attention to what's going on in the bigger world. You're just going to look at the number.
The tape tells
even
all.
In April.
What's that?
Even in April.
Doesn't matter. The tape is going to tell you what's going on. What's going on.
Okay.
Don't argue.
What are your investors saying? What are they talking about these days? What are they concerned about?
Well, everybody's concerned about the tariffs, the T word. So, we're kind of working around that with, we're following our rules. We're very rule-based. So quantitatively, we have seen a couple of reasons for stepping back into the market.
Okay.
So we were very heavy in cash through most of the winter. We have been stepping in over the past month, but there's also some fundamental reasons, aka potential, this is from the fundamental side, some potential signs of slowing and recession on both sides of the border, really. So we're kind of concerned that we don't want to step in aggressively. So we've been buying value. We've been still holding tons of cash, and we're just trying to buy not so correlated equities to the overall stock market, because I don't know if we want to carry on to this, but basically the markets rarely make V bottoms. Like COVID was the big one. 2020, yeah, it went down, then it went up. But that was a pretty rare. If you look through history, like 100 years on the Dow or something, you won't find many V bottoms. They're typically complex. The market falls and does a little bit of upsy downsy stuff and then finally decides to move back into a bull market. So we're kind of wary that, unless this is another one of those once every 100 years, V bottoms, we're a little bit wary of stepping in aggressively. So that's
what made you step back in. You said you held cash for much of the winter, and you recently stepped back in. What led you to step back in?
Well, I have a quant model that tells me when risk is high versus the risk model that I use went into neutral. Then we saw a move ahead of the 50-day moving average and the 200-day moving average, so we stepped in some more. But again, we're still like well over a quarter cash because, again, I'm concerned that this is not going to be a V bottom. So who knows? If we take out the highs on the S&P, then I have proof that we are moving back into a bull, but we haven't done that yet.
Got it. Okay, we're going to take a quick break, line up some phone calls for Keith. We're going to be back with Keith Richards, President, Chief Portfolio Manager at ValueTrend Wealth Management. Here's how to reach us. His questions today on technical analysis. Back in a moment. Welcome back. Thanks for joining us again on Market Call. Let's go straight to your phone calls or your questions. The first one's an email. Sabrina has written in and she says, when would be a good time to buy XEG? Tell me about XEG.
Yeah, XEG, and it's the energy ETF, Canadian energy ETF. I've written a couple blogs on the subject with some caveats, but I'm relatively positive on Canadian energy. But if you look at all energy stocks, like all oil and gas stocks, the oil stocks have been kind of near the bottom of a trading range, whereas the gas stocks have done okay, because if you look at the price of gas, it's done better. And there's probably more probability of upside or over the next couple of years.
In gas?
Yeah. But nevertheless, there might be opportunity in oil stocks. So when we look at an ETF, it's kind of a mixture of them all, although it'll probably be a little bit more biased towards oil. So my view on XEG or most energy stocks is they're all in kind of a band. So if we look at a chart, they all kind of look like that going back. And you just try to, you try to buy on a lift off of the bottom and then sell somewhere near resistance. This is kind of bouncing from the halfway point, but that was, sorry, I just drew a terrible line there. That was kind of a support point from back in 24. So that's, you have a decent chance of it getting to the $18.5, $19 range at least, maybe a bit higher. But to me, there's individual stocks I'd rather trade than the ETF.
Got it. Okay. Let's go to the phone lines. And Costa's on the line from Montreal with a question. Hi, Costa.
Hi, Mirella. Hi, Keith. Thank you for taking my call. Mr. Richards, I would appreciate your expertise on Constellation Software, CSU. How does the chart look and the technicals? Thank you, my friend.
Okay. Thanks for the question, Costa.
The chart looks marvelous. So yeah, it's an uptrend. And, the trend is your friend till it ends, as they say. So you try to buy on the dips that approach the trend line. And I didn't draw a perfect trend line anyway. So if you drew it maybe a little bit better, it did come down recently, touched, whether is it going to pull back again closer to the trend line? That's a possibility because I'm a little bit near term cautious on the market, so it could pull back. I'd be all over it on that pullback. If you own it, I wouldn't even bother selling it. It's not worth this kind of dip, but there might be a buying opportunity really soon on for new investment.
Got it. Okay, let's go back to the phone lines then. John's on the line today from London. Hi, John.
Hi, Mirella. Hello, Keith. Jamie Dimon calls the markets complacent. I guess he's talking to you and me.
Yeah.
But in any case, I found a stock called Kindly MD. They're an AI company that handles medical management. And wait till you see this chart. I don't know if you're aware of it. Wait till you see the chart. Have a little fun with it and tell me what you think. Thanks very much.
All right.
Kindly MD.
I'm excited.
I'm looking at it now, and it's interesting.
All right. Okay.
So it doesn't look like, unfortunately, we can pull up the chart. So I wish we could do technical analysis on that, but we can't.
Oh, that's too bad.
Yeah, we'll maybe try and get back to that one, circle around after the break and see if we can do that. Okay, sorry about that, John. We will try and get to it. Let's move on to Colin from Sarnia, Ontario. Hi, Colin.
Hello, Mirella.
What's your question today?
It is about silver. My inner pirate is starting to get excited, and I'd like to know what his opinion is on silver, especially buyer behavior as interpreted in the charts.
Okay, thank you for the question. We've got silver futures up right now. It is down a little bit today, about 1.5%, but this is the 3-year chart. What is your take on silver?
Well, Colin, I've done a lot of videos and a lot of blogs on the subject of silver and gold, but I recently have been talking about this kind of stuff on my blogs and videos, saying that I prefer silver over gold, even though I still hold gold, but silver's got a kind of a catch-up trade to do. So if you look at silver versus gold, you'll see that silver's still somewhat below its all-time high, whereas gold took out its high a year ago or a year and a half ago. So it broke out of a big base, and silver's just getting started as far as I'm concerned. So, and it's the same with the producers. So I think the silver's producers and the gold producers will close the gap on the price of their commodity. So, I mean, I own lots of silver.
Okay.
But we own some gold too. And that is, when we say I'm 25% or so cash, but some of the actual equity is in gold and silver. So, bit of an uptrend. It's in fine shape. We love it. I can't say anything negative about it.
And because you're expecting it to continue on an upward swing, you would buy at any point.
Yeah, I mean, it's great because right now it's kind of coming down to that little trend line I just drew, so it's probably opportunistic at this point. But I think the bigger picture is bullish, just from, as I said, from a closing of the jaws, we sometimes call it, when valuations come back to closer to the actual underlying of some of the producers, and even the difference between silver and gold ratio. So.
And I know you trade sort of on shorter time periods than a lot of other people. So silver, something like that, how long would you suggest he buy in for? What timeline would you look at for that?
Well, most of the time, you're absolutely correct. We're relatively shorter traders. We're not super short, but 3-6 months is our typical horizon. We bought gold more than a year ago. I think it was a year and a half ago on that original breakout. So, and we still hold it. We've gone in and out a couple times. Silver, we only started buying, I would think, maybe the very beginning of this year or late 24, and we always leg into things, so we bought and we bought and we bought. So I'm viewing both of them kind of in a big picture format, but as well, I'm always willing to take, when things get overbought, we will take profit sometimes and just go back in again. And we just did that with gold. So gold went to what was it, 30. I'm sorry, I'm gapping.
More
but
than
it was at
3,500, right?
36, I think it was.
Okay.
And then we were selling, and we actually technically projected around 32. It hit 32. We started buying back again. So we will do that, but our longer term view is very bullish for gold and silver.
Got it. Let's squeeze in one more phone call before we have to take a break. Joseph is on the line today from Montreal. Hi, Joseph.
Hi there. Thanks for taking my call. Keith, want to hear what you have to say about Royal Bank. It was challenging all-time highs just a few days ago, but it came off from that. So what I want to know is, do you think we're approaching a point where it might bounce off? And the reason I ask is I'm asking really about momentum. A lot of people say that if it pierces all-time high and stays above that, it's almost like sky's the limit. Mm-hmm. What's your opinion on momentum? How do you view momentum on the stock price? Does it really go high with no end in sight? Or where do you place momentum against other indicators that might be screaming overbought and sell now? Thanks in advance.
Okay,
yeah,
thanks for the question.
That's a very intelligent question. I appreciate that because, there's like some people just take momentum indicators because they're overbought or oversold, and some people just move with the momentum. But you have to take everything together, because I even use momentum indicators to see if they're diverging against price action itself, because if momentum's slowing but price is going up, you know that there's going to be bad news coming for the stock eventually. So in this case, like it looks like it hit a high, and
at 178, I guess, earlier this year.
Yeah, it hit a high and it's pulled back and it's attempting to hit that again. So I'm going to use that. Let's call that, what is that, about 180, give or take. That's going to be a resistance point. So you need to crack that. And at this point, I can't see what RSI or MACD are doing right now. So I'm just going to have to go with the price chart in this show. But what I'm going to say is it needs to crack it. And if momentum's already overbought and it's about to hit resistance, I'd say it has less chance of going through resistance. However, if it's hooking up from a level, you could see it go through that $180.
Got it. Okay, let's take a quick break. We're going to line up some more phone calls for Keith Richards, President Chief Portfolio Manager, ValueTrend Wealth Management. Your questions today on technical analysis. Here's how to reach us. We're back in a moment. Welcome back. Straight to the phone lines for questions for Keith today. Neil is on the line from King Township with his question. Hi, Neil.
Good afternoon, and thanks for taking my call. I'm an avid reader of your blog, and my question is related to the earlier discussion. I'm just wondering if you think there's substantial momentum left in gold, and particularly, specifically, AEM. It seems to be at a very high price, but its mines are basically located in North America. So from a security standpoint, I'm just wondering if you think there's upside there.
Okay, having a look at Agnico is at 160.58 at this point, so a little bit up today. What's your take?
Well, Neil was asking, do I like gold? And I'll quote Austin Powers or Duck. I love gold, Mr. Powers.
Who doesn't, right?
Who doesn't? I had to do that. So as far as the chart for AEM, I mean, it's just another lovely story for gold. The trend until it ends, it's your friend. I know it's a silly little ditty that people say, but there's truth to it. Like, yes, it may dip. It can always do that. It can pull back to the trend line and all that good stuff. But until it breaks lows and highs and, it starts to look terrible in the charts, you just go with it. And I'd say buy on the dips. So it's a good stock.
Got it. Okay, let's go on to the next phone call. Mackenzie from Saskatoon on the line. Hi, Mackenzie.
Hello, guys.
What's your question today?
On Birchcliff, I think it's been a little while since I've heard Keith talk about Birchcliff. If my memory serves, it was about a year ago. He was saying if it ever got to about 630, he'd be all over it. It's above 630, all over it. Thanks, and looking forward to your answer.
Thanks for the question.
Okay, yeah, I mean, it's kind of, this is a great question. So it looks like it's trying to break out. Now, it did a false breakout earlier this year, so just be aware of that. But so I mean, I'm going to now give you a caveat to my original statement. You really want to see this little rip here back in, that might have been March or something of this year, taken out. But bases are good. So they always say the greater the base, the better the case. There's been a pretty good base there, like a year of or more of base. So a breakout would be very, very powerful on this stock. I'm a little concerned about this, but hey, it looks like it wants to break out. If it's for real this time, then you've got like tons of upside ahead. So hopefully this little blip, this little piece of resistance from a month or two ago is taken out, and you'll see, I think, lots of good upside.
So timing-wise, if we can pull that chart back up. So we had a 3-year timeline up right there, and it looks like it hit a high sort of, what is at the end of 2022, higher in 2023?
Yeah, like $12 or something, yeah.
And then started going down. So how do you feel about that timeline?
Well, I mean, it's a little shorter chart. We look at a 5-year, we might see some more resistance, but in the near term, well, there we go. It's magic. This is like magic TV, right? So yeah, you did have the rise, the double top, kind of a topping formation, the breakdown, lower highs, lower lows, all this stuff I always talk about in my blog and my courses. And here we have the base. And actually, I even wrote a book called Sideways, and it's all about these bases, because I love base breakouts, because they're so powerful if they break. So now the bottom, if they break to the bottom, to the downside, then it's powerful to the downside. So keep that in mind. But I mean, I think there's no issues with this chart if it breaks out for real. And so we have to have a methodology. I teach that in my courses, but it's basically 3 days to 3 weeks past resistance. Then you start legging in. I use 3 legs, and but you've got tons of potential on this stock if it breaks out, like tons. So, you just have to see if it works.
Okay, let's move on to Greg then. Greg's calling from Alamont, Ontario. Hi, Greg. What's your question today?
Yeah, thank you, Marla. And Keith, thanks for taking my question. It's about Blackstone, the alternative asset management firm. Keith, I've been in it probably 5 years, and I've bought in 3 times, and, my average cost is only around $70. And as you know, it had a terrific run up the end of 2024, and now it's been on somewhat of a volatile roller coaster, but, has been declining a bit, but it still shows some signs that it wants to go up. And I just wanted to get your opinion if we've seen the heydays on this one, because it seems their real estate holdings are making the stock challenged. And the only other thing I was going to mention is, like your recommendations, I'm actually been increasing my cash holdings, and I'm wondering if this is something I should take advantage at this time, or do you think it's at a number where it wouldn't be bad to buy in again? Okay. Thank you, and I'll hang up.
Thanks, Greg. So it was at the end of November, it went up to 199. Down to 137 now, after sort of the dip at the same part of the year as everyone else, sort of the April dip.
Yeah, I mean, it's been volatile. But this is we were just talking about base for the last caller. So this is a good example of that. So, it had like well over a year of going nowhere. It broke out, and like I said, if you get a legit breakout, you see it didn't retrace or anything, it stayed there. Then it just went to the moon. Now you're rounding down, okay? You've pulled down. So the next thing, I'll just clear the screen. The next thing you're gonna look at is, well, where could it land? And where it could land is, son of a gun, where it landed, okay? So old resistance becomes new support. It's just, again, read my book Sideways, and it talks all about why that is. It's basically just people have memory of where they bought, where they sold, so buyers come in at certain points. So this is technical analysis is based on logic. It's not just lines on a chart. So it's the way people think. So it's bouncing off, you can see. So that's very positive. So I would say that if I was buying this, I would be legging in. Again, I'm a big believer you got to leg in, because it could suddenly fail and break down. And if it breaks below this, whatever this level might be, let's call it $130. If it breaks below that level, that's bad news. But for now, it's above that. It looks positive. So put a leg in. And then your stop loss is sell below this old resistance level, which is new support.
Got it. Okay, let's get to one more phone call. Jerry's on the line from Toronto with his question. Hi, Jerry.
Yes, hi. Thanks for taking my call. Keith, can you give us your technical analysis of Bitcoin, please?
Yeah, I mean, I've written a bit on Bitcoin too. It's a fascinating subject, because there's a couple things that are interesting about Bitcoin. Bitcoin and gold are actually often kind of negatively correlated. Sometimes they move together, but if Bitcoin is surging, sometimes you'll see gold, if it had been surging, round over. And that's kind of what happened. I mean, we saw gold pull back, $400 or whatever it was. I think that Bitcoin, now that it's at whatever, 100 and, what is that now, 111. So, the last high was 100. So new highs, be good, so what do they call it? Don't argue with the tape. So, took out the high. Could you get a retracement? Sure, anytime. But my view is that this is bullish. Bitcoin, in case you don't know, it's volatile. So it's like
when it runs, it runs.
When it runs, it runs. And so it could be on for a good run this time. And you see gold kind of pausing, which, I'm bullish on gold, but it is kind of pausing. So Bitcoin will probably run for a while. Sometimes they change. It's like two dance partners. You just, go out with Bitcoin for a while, then you go out with gold for a while.
And right now, Bitcoin's in favor. Okay.
Right now.
We're going to take a quick break. When we come back, we'll have a look at Keith's past picks. We're back in a moment. Welcome back. We want to take a look at Keith's past picks coming from March 12th of this year. At the time, he chose iShares, the 20-year T-bond ETF, which was $89.86 at the time. It's dropped to $83.52, a 7% drop, or 6% total return drop. What happened with iShares, and why did you like it at the time?
Well, we were looking at, there's a trading pattern on TLT, all right? And it was moving between 85 to, let's call it 95. So we wanted to trade that move. Now, we always use, and this is what I actually love having this stock up because it's down. And so I'm going to just walk you through how we trade. So this stock broke 85. So that's our uncle point. It's not a physical stop loss. We never use physical stop losses because you can get whipped on those. But we say, okay, there's our uncle point. We count minimum of 3 days. So it's been yesterday, today, and we'll see what happens tomorrow. That'll be 3 days of below 85. And then on Monday or Tuesday or whatever, I guess Monday the markets are closed. So Tuesday, we will sell the position, okay? So some trades don't work out, and the best traders, they lose money on trades, but it's how much money you lose. You take a 6 or 7% haircut, pardon the bald pun, but you can see I've had lots of haircuts. So you take a bit of a haircut and you move on. So rather than hanging on and hoping and watching it go down and down and down. So we're going to be out probably pretty soon. Got it.
Let's go to your next pick from March, which was Imperial Oil. At the time, it was 96.38. It's now 98.49, 2% upside return. In that period, 2% total return as well. A lot's been going on with oil in the past or the start of the year, and it continues to fluctuate greatly. Is this something you're holding on to?
Yeah, it's so. I put it on the show as a recommendation because we always are. This is a swing trade, so this is another type of trade. So you can see it. It's as clear as light that it likes to get down around, let's call it 90-ish, and then it likes to go to, let's call it 100-ish. Okay, so there's 10%. You can trade it and trade it and trade it. And so we were buying we always buy on the bounce. We don't guess that it won't break through. So we buy in the bounce and we try to get it close to $100. We're still in the trade. We also have a little bit longer view on oil anyways, but we feel that all oil will break out eventually. Meanwhile, if we can catch this, we were hoping to get $100 on it. It looks like it's pulled back a bit, but if we get our 100, we'll probably sell it and then buy it back again if it returns to the bottom. If it doesn't, well, our buy price was close to the bottom anyway, so we're not losing anything.
Give me your sort of longer outlook on oil. You said you expect it to come back.
Yeah. We think oil in the longer run will move up from commodity cycles that we follow. We're more bullish on gas, like I mentioned at the beginning of the show, but we don't mind oil either.
And we do want to remind people that you're still holding in cash. You are still, and explain why that is.
Well, okay, so markets. So we have a yin and yang market. I actually just published a video yesterday. So it gives you 4 technical reasons why market is bullish, and then 4 reasons, which include a couple of economic and fundamental reasons why the market is maybe bearish. And then my conclusion is we'll probably get a pullback in the near term, and then from there it all depends on what the orange man says next, right? So so what we're looking at holding some cash because markets rarely make V bottoms, and so like COVID, that was a V bottom, but if I go back in time, you just don't see a lot of V bottoms. So it's more likely we'll get another pullback of some sort. I'm guessing back to the 200-day moving average or there and abouts, but that's just a guess. And then, maybe that'll just finish it out, and then the market will go up. But I can't call that. I won't predict. I'm just saying that you don't get V bottoms very often. It's just not worth gambling and going all in with that in mind.
Got it. We're going to take a quick break. Line up more phone calls for Keith, so stay tuned for that. Here's how to reach us. We're back in a moment. Welcome back. Let's get to some technical analysis on Kindly. We had a viewer call in with a question for Kindly on the NASDAQ. We're going to pull that up really quickly so that Keith can speak to it. There's not a long history here, so I'm not sure what you can read, but take a look.
Well, it is an interesting chart, but this is not a typical chart. Clearly, there was some news that came out that, I think they're involved with helping people that are taking opioids or something.
Yeah, it's a chronic pain management company.
Okay, so clearly they announced some news. The stock went bananas in a very short period of time. The charts really can't tell you much. Honestly, this is just a clearly news-driven thing, and I can't even make a call on this. It's parabolic, so it's I'm sorry.
There's nowhere to run.
There's nothing to talk about.
Got it. So we'll leave that one and move on to our phone lines again. Majinder's on the line from Edmonton today. Hi, what's your question?
Hi, Keith. My question for Keith is about CN Rail. I bought it at about $145 level. It went down to about 132. Just wondering if it drop again, will there be another buying opportunity, or should I just stay the course for a couple of years?
Okay, let's pull that up and have a look at CN.
So we actually held this stock a while back, and we stopped out. Like, again, when I say stop, we don't use physical stops, but we call them uncle points. So, bully on the ground got you in the arm lock, and we say uncle, right? So we look at support. If it's, it's got a hold, and CN Rail, had some positive bounces off of that old support level, around 150, give or take, and then it broke. It bounced off, failed, tried to revive, and it didn't manage, so we sold. And so I'm until it returns above that line.
So 150.
I can't really be all that bullish on it. It can return. There's no predictions here, but our discipline is, get out and move on.
Okay.
So.
Let's move on then. Kevin's on the line with a question today from Vancouver. Hi, Kevin.
Hi, Keith. My question is on Methanex today. First of all, could you give me your chart read on this one? And I've had some success with this one in the past. It's a higher beta name too. So also, could you give me your strategy on stop losses when something's higher beta like this? I'll hang up and listen. Thanks.
Okay, thanks for the question. So we'll pull up Methanex, which is at 45.38 here.
Okay. So, one of the things that affords success in investing is time. So, in other words, time as an investor. And I've been trading for 35 years, so I've learned a few things about stop losses, and that is don't use physical stop losses. And I talk about this in my courses and stuff because traders kind of know where retail investors will put their stops, and then they head fake you. They push stock below, and then they pick up your stock, and it goes back up. And anybody that's done physical stop losses, they've had that happen to them. So, and including early in my career. So I use mental stops, but we know where we're going to stop out. And it's always based on support. High beta stocks, you got to give it a little bit more room because things can whip around a bit. Now, we bought Methanex we have two accounts equity accounts that we manage for our clients. One is our more conservative one. That's where we have the big chunk of cash and everything. And then the other one is aggressive. So it's called our aggressive strategy. And we bought MX just, I don't know, it was like a week ago or so. It was just like a few days ago. And why? Well, it's pretty washed out. It's pretty oversold. And it does that. And so we figured, okay, it's bouncing off of this old point from 22, and maybe it'll go up. And if it goes up, maybe we can get, $60, $70 out of it. Our stop loss is below that support point. So.
Which is, what would you say that is?
I think it's around 45 or something. But again, I have to go to my proper charts to look. But we know that we'll hold it so long as it goes up, and we'll get rid of it if it fails. And we saw that example with TLT, on my top picks, and we just get rid of things if they're not working.
Got it.
So.
Okay, let's go back to the phone lines. Liette is calling from Toronto. What's your question today, Liette?
Hello.
Hi.
Hi, first-time caller. Thanks for taking my call. So I want to first say thanks for being a great host.
Oh, thank you very much.
And I'm a big fan of Keith. Your smart money dumb money is amazing.
Go ahead with your question.
I love the concept. Yeah. So I love your book and its concept about the political voting machine instead of a robot turning numbers. And, it's such an eye-opener. And anyway, my question is about the S&P. And I want to ask about some clarification from last time. You talked about the S&P technicals. They weren't so great, and you accumulated over time 20% in cash. So question is twofold. How often did you check the technicals and ended up selling some? Like, was it once a week? And second, how much percentage-wise did you sell each time to eventually accumulate 20%? Was it like, oh, this week the S&P technicals look pretty bad, you sell 1%, and then next week you check again, it still looks bad, and then you sell another 1%. Thank you, and I wish you both an excellent afternoon.
Thanks very much. So a very specific question on timing and how you time things out.
So if you want the full explanation, I have a course that you can go to our website, and it's called the Online Trading Course. And it goes into how I'm legging out and what are my triggers. But essentially, you get up, so we look at peak trough, so lower high, lower low, and we look at the 200-day moving average and the 50-day moving average. And as these things are breaking, we take another leg out. Now, it depends on how much cash you want to raise, and that can be determined by, well, there's a lot of moving parts, so I can't explain this in 1 minute. But we have a quant reading every month. We do it only at the beginning of every month, and it tells us the overall risk atmosphere of the market. It's called a barometer, and I do report it on my blog once a month. Readers can look at it for free. It's all in the first week of every month. So the barometer, if it's neutral or if it's bearish, we're going to look for more cash, okay? If it's neutral, we're going to look for less cash, but if we still got the technical breakdown, we're still going to be raising cash. So as those levels break, the moving averages and stuff, we'll maybe be selling 3% at a time or so. But if the market's in a bearish position from the quant thing we do, then we could be raising 5 to 6 and more % cash each leg out. So
okay, so that's sort of the way to look at it, but it depends on sort of how much you want to do.
Just like they always say, the economists, they always say, well, it depends.
Yeah,
so that's my answer.
Okay, we hope we gave him some information that he can use there. We want to take a quick break. We're back with Keith Richards in just a moment. Stay tuned. Welcome back. Let's go right back to the phone lines. Deborah's been holding on the line from Okanagan Falls in BC. Hi, Deborah.
Oh, hi. Good morning, Marilla. I just wanted to say I agree with the teacher that called in a couple of days ago and gave you an A+ for your performance and questions on Market Call.
Thank you very much. How can we help you?
Okay. Yeah, so my question today is on Axon. This is an interesting company because they have electrical weapons for law enforcement, but they also have an AI reporting writing software. So, Keith, I've been eyeballing an entry point from the chart, and it has broken through a resistance level of 680 in the past. So I would love your analysis, please.
Okay, let's pull up Axon. So it is up to about 729 is what I have on my chart. But let's have a look.
So, Deborah, good for you. You've called it right that there's. So I don't even have to say anything. She just made her own call.
Well, she wants confirmation,
sure,
right?
Confirmation, yes. So, yes, it broke out. Yes, it's probably going to pull back to the breakout point, which we're going to call a neckline, for lack of other words. And I just drew a terrible line because it's maybe a bit better, kind of. I don't know. It's hard to draw these lines on an angle like this. But it looks like it's going to retrace. You don't want to see it break back down through our support, which, let's just make the number easy, around $700. I don't know if that's the actual support line because it's hard to look on these charts, but don't let it go through those last two peaks. for any period of time. You can see spikes for a couple of days, that's fine, right? But if it goes below that pretend $700 support point and stays there for like a week or more, you probably don't want to be buying. So that's the way I would look at it.
Got it. Okay, let's go back to the phone lines. Peter's on the line from Pickering, Ontario today. Hi, Peter.
Hello. Thank you for taking my call. Keith, I know you had some positive thoughts on Constellation Software. My question is on the Lumen Group, which is a spinoff from Constellation Software. I'm specifically just looking at the year-to-date chart, and it looks like it's been trading sideways up until February of this year, and then it's kind of gone up substantially since then. It's pulled back in the last 10 days from $50 to $46. Just looking at the last 3 months chart, would you say it looks healthy and it would be a good buying opportunity right now at this little bit of a pullback? Thank you.
Okay, so it's at 46.14 at the point, up 12% year over year. Lots of peaks and valleys here. What do you make of this?
Yeah, because this is a really short-term view, right? So we were just looking at the 3-year chart, and the bigger trend was up. So that we always start with the big chart, and then we work down. So if we kind of look at the big picture, there's the 3-year chart. We could even go 5-year and 10-year. I'm not going to make the
make them do that. Okay. So what do you read in the 3-year?
So 3 years, it's in an uptrend. Okay. So now we can go back to the year-to-date chart. So I just wanted to start with that look because it's in okay shape from a person that owns it. If you want to buy more, now we can go to the daily chart. You can see on the daily chart, it broke out of a base. Again, this is very short-term stuff because this is only going back to like January,
April, yeah.
right? It's really just very new stuff. But it looks like there's a near-term uptrend, but it has pulled back. And you just don't want to see this point, which again, these charts, the pricing I can't really see, but you see right there.
46-ish?
46-ish, let's say, the bottom here. I'm gonna actually clear the screen, use this little arrow tool. There we go. So, okay. So that's the point we don't want to see broken. Okay. So far, it seems to be holding.
And we're there today, right?
And we're there today. So if it bounces up, that's, oops, I'm gonna go back to my line thing. But if it bounces up, then we're good.
Okay.
Okay.
Good to know. Let's move on to another phone call. Mozz is on the line from Vancouver with a question. Hi, Mozz.
Hi, good morning. Thank you for taking my call. My question is on Vertiv. The symbol is VRT. Can you please provide me a technical analysis of what is going on? Is it a hold, buy, or a sell?
Today. Thanks for your question. Let's have a look at Vertiv, which I have on the New York Stock Exchange at $104.15 today. Let's pull up
on a 3-year chart or more.
Okay, let's see if we can pull up a 3-year chart and take a look at that. Oh, doesn't look like we can, so I'm not sure what you can tell from where we are today.
Well, I mean, and again, I don't know how, if this might be a relatively new issue, meaning over just the past few years, but there is a support level that it did bounce off of, so that's good news. There's a little neckline consolidation. This is a daily chart. This is all really near-term stuff, so you got to take that into context that, you know, you need that. Just like with the last caller, we looked at the big picture first, go, yeah, it's going up, but near time, maybe there's opportunity. So this looks like, yeah, that's great. It broke a little neckline. It's bounced out of that. It might retrace, but you know, generally speaking, it looks okay. Next resistance is probably around $140. So it's a decent looking picture. You want to make sure that if I clear the screen, this neckline, whatever that is, might be $90 or so, is not broken.
Got it. Okay, let's try and squeeze in Wayne, who's calling today from Tecumseh in Ontario. Hi, Wayne.
Hi, how you doing?
Good. What's your question today?
I'm wondering, using the IMO example, it seemed like it was oscillating using a CCI for like a long period of time, and then it had this breakout in 2020. When do you stop paying attention to the oscillation and start paying attention to the breakout?
Okay, so great question, because there's kind of an order of events, and so all else falls in line after chart action, like basic price action. I mean, if you go back to Bernard Baruch and what was that famous book? It's gapping me right now, but the original traders, all they had was ticker tapes. They would look at price action. They didn't have oscillators and all those things. And all they were interested in is, you know, they were kind of looking at what's the price doing? Is it pulling back to a past area of consolidation? And these guys would be able to do it just by looking at the tape. They had brilliantly fast minds. So the way I look at things is all those oscillators, you got to watch it. You can't see the forest for the trees, and the oscillators are the trees, but you got to pay attention to the forest. So breakouts are the most important thing. And then after that, yeah, it might be overbought. That's fine. It might indicate it pulls back. Watch the neckline, the old breakout point, for not to fail, just like we looked at it a minute ago. So that's all I can tell you is it always comes down to the chart. The oscillators are just a side tool you use to help refine your trades.
Okay, we do have to leave the phone calls and questions there. Don't go away, though. Keith has his next top picks that he will share after the break. Time now for top picks from Keith Richards. His first pick is BMO India Equity Index ETF. And we were just talking about this at the break as to what your interest is in emerging markets and why sort of BMO's equity ETF here.
We have traded this before, and then we sold it, and now we're back in it. So that's one thing. So we like emerging markets in general. Why? Because they're not North America. I just think that, we just saw the U.S. credit rating and Canadian credit rating got a warning from Fitch as well. So, and that's just the credit side. I mean, there's a lot of reasons, especially on the U.S., that markets are overdone. And we have some U.S. stocks, but we're focusing on much more outside of U.S. and commodities as well and stuff like that. Because we think that's a cycle. So India, they cracked a pretty good deal on the tariff side. I just did a blog yesterday. You can go to my website, ValueTrend.ca, and it's called International Opportunities. And you can see a little bit more data on India, but they're doing a lot of exports to the U.S., and the U.S. has done the deal. So this is a positive thing in their case. So we look at the recent dip as an opportunity. I mean, it did a little, if we pulled up a shorter term chart, we could, but it doesn't matter. It looks like it's kind of done a little bit of a base and a little bit of a breakout. We think it'll hit the old high lickety split, and then we think in the longer run, it'll go
Where was
higher.
the high? Again, it's hard to see, 55-ish?
55, 56, yeah.
Got it.
So
okay.
Near term, not a ton of upside, but we think it'll hit that. And then it needs to break through that, but we'll leg in. Like we just did our first leg back in. We're 2% in it, and we'll have up to 6% in the position eventually. So little at a time.
Got it. Let's get to your next pick then, which is Nutrien on the TSX. I haven't looked up Nutrien in a while. Well, what has it been doing?
Well, again, brand new position for us. Like we've traded Nutrien in the past too. A lot of our stocks we come back to over and over again. But this is a base, and a little bit of resistance here seems to be breaking out. You've got your resistance targets, and they're commodity. And as I said, I'm less interested in equities. These guys do potash and whatnot, farming, nutrients. So we like that as part of our commodity complex, and we're buying because of the breakout.
And again, you're just sort of picking away at it, or are you?
We just bought one leg 2%. So we do 2% legs. That's our way of doing things. So we will buy as it moves up, and if it fails, we will get out. So that's just our strategy of doing things.
And just out of curiosity, sort of what are you looking at as your top or your bottom is when it fails? When would you get out of it?
Oh, okay. Well, we always pay attention to the breakout. It depends on how many legs. See, I'm always saying it depends, doesn't it? I feel like, I should just have one arm so I can't say on the one hand. If it breaks this resistance point, which is now going to be support, then we will probably take one leg out. If it broke old long-term support, which is the bottom of the range, then we just totally want out, right? And that's what's happened with TLT near the beginning of the show, my top pick. It broke the final support. We were buying it around, probably around 87 originally. So now it's like 84 or 85, or below 85. So we're going to take a haircut on it, but we're saying uncle, that's it. So that's the way I would view this trade is, hopefully it continues moving up, but we'll give it a little bit of slack and maybe just move a little bit out at a time if it starts to look bad.
Okay, let's get to your last pick, which is Aecon on the TSX, a construction company. I did look that up earlier, so it's gone significantly down. You're taking. When did you start sort of dipping into this?
This week.
Literally.
Again,
okay.
all three of these picks are brand new.
Okay.
So you're getting hot off the press. You know what we're just buying, not what we bought a year ago or whatever. So Aecon, it went from whatever, just under $30 to I think at one point maybe 15 or 16. It just got spanked. It got cut in half. But we have traded Aecon before too, and Craig, we do fundamentals as well. I'm here to talk about technicals, but Craig likes the potential opportunity from a fundamental point of view, and as well, it's just bouncing off. Now it had a bit of a rough day the other day, but we bought it a couple days before that when it had an up day, and then it did a down day. So we know it's probably going to do this. It's probably going to go up and down a little bit. So long as it doesn't crack the low point where we were just buying off of, then we're in the trade, and we expect lots of volatility. But long run, we think it's got some upside. I don't know if it'll go back to 30, but we think it's got some upside. We have a spendy government in place; they'll spend, and that's infrastructure. So that'll be good for the company.
Something that'll benefit from. Okay,
yeah.
Keith Richards, got to leave it there, sir. I'm out of time. Thanks for coming in for Market Call, and thank you very much for joining us today. We'll see you again tomorrow. A quick look at the markets as we head to a break.